let's talk about FHA loans.
Let's talk about them.
So those have a limit.
Yes, ma'am.
And that is?
So in the Houston area right now it's $356,000.
Oh, it's by area. Mm-hmm. Really? Is that by state, city?
For the most part, I'm pretty sure all of Texas is 356 off the top of my head. Different states would have different amounts. So, and different metro areas could have different amounts also.
So this is similar to what we were discussing before. When someone's buying a home and they're getting financed with FHA, they have to make sure that the amount they're financing is 356 or lower.
Correct.
Okay.
Correct. So FHA's minimum down payment is 3.5%. But in theory, they could put down any amount they want to get to that loan amount.
So there's not a max amount on the price of the home. It's just the loan.
Correct.
So if they want to get a $500,000 house, they can, as long as they put down 100 and whatever thousand.
Right. We need to bring a calculator next time.
I know. We're doing a podcast on financing and we don't have a calculator. But yeah, okay. So I get tons of questions around this, and I'd like to know, what are the benefits of an FHA?
Yeah, let's talk about it. So FHA is really built on being aggressive for home buyers to be able to get into a home.
Okay.
So the short thing is it's more aggressive on credit score, meaning it's not as anal as a conventional loan. Mm-hmm. So like I can do FHA loans down to 600 credit score. So people with not perfect credit, it's great. It's also going to allow a very low down payment, which is 3.5% of the sales price. Mm-hmm. Is also going to allow a higher debt to income ratio.
That's a big one.
That's a huge one.
Yeah.
And what does that mean? It's actually allowing you to buy more home than a conventional loan would allow you to buy.
Okay. It allows you to have more debt, so to speak, at the closing table. I mean, I know that's one of the things. I've had some clients where they had to switch to an FHA mid-contract. Like we were under contract. They thought they were going to do a conventional. Some things popped up during the escrow period, and they had to get flipped over to FHA.
100%. And that is where, again, it goes back to being aggressive. So maybe they made less income than the lender thought they did,
right,
and that's why they switched it. Or better terms, higher debt to income ratio. So for sure you see that.
Okay. And so what are some of the downsides of FHA?
Absolutely. So FHA is going to have mortgage insurance no matter what down payment you put down. So if you have excellent credit, an 800 credit score, and you're going to put down 20%, you would never choose an FHA loan because it's going to have mortgage insurance.
Does that mortgage insurance ever fall off?
It doesn't.
Like on a conventional, it falls off once the house has 20% equity?
Right, correct. Now, if they're putting down the minimum, it never goes away. So it's one of those loans.
On conventional or FHA?
FHA.
Okay.
So that's where if you're putting down the 3.5%, it's going to stay on there. So
for the life of the loan.
For the life of the loan. Now, sometimes people get the impression that, hey, is it a good loan or is it a bad loan? I'm going to be honest and tell you, whatever loan gets you in the home is a great loan.
Yeah.
So don't overthink it. A lot of people down the line are going to I have a lady right now, we're refinancing her out of her FHA loan that she used to buy the home 5 years ago.
But she got her foot in the door and got herself in a house.
Correct.
Yeah. 5
years ago. So it was the perfect loan then. Her situation has changed. She has the equity in the home. We're refinancing to lower the payment. So don't fall, again, this is not one of those situations where you fall in love with, hey, I want to get an FHA loan. No, you want your lender to give you options.
Yeah, I mean, you have to go into it with the understanding that it's not 100% perfect scenario for a mortgage, but at least you're getting the home. It's
right.
Either get the home or not. Which one? You know,
Correct.
I always tell everybody, you might not be completely in love with the terms of your FHA loan, but if you can't buy the house, you're going to be renting. So which one? Do you want to rent, or do you want to take the loan that has a little bit higher interest than you thought it would? Which one do you want?
100%. Let's talk about this. Hey, I'm going to save until I get 20% down payment. Then I'm going to buy a house.
Right.
Wonderful. You could buy it today on an FHA loan with 3.5%, or you're going to wait a year or 2 years.
Or more. Save 20%.
To put down 20%. In that time, the interest rate could go up a point.
Home prices could go up.
I mean,
significantly.
Just in the last year, what was the average number that they said home prices were going up? 10, 20, 30%.
Yeah, no, it's way more than that.
So by the time you save that up, you put yourself in a worse financial situation.
Exactly. I 100% agree. I'm always having to present things to people like that. And they're like, oh, I didn't think of it that way. Because they get hyper focused on the interest rate or the fees or whatever it is. And I'm like, no, if you look at it big picture, you're going to realize this, 0.75 interest rate is not going to ruin your life for the rest of your life, but get your family in a house.
Correct. And I think sometimes too, in all fairness, they're going off of their parents' advice, which is always, yes, in a perfect world, if you can put down 20%, do it.
Right.
But if you can't, waiting for sure is not the answer.
Yeah. And also when the interest rates are so amazing, honestly, compared to what they were 10 years ago or 5 years ago or whatever, they're so amazing. Like it's, put down as minimal as you can, finance with a great rate, and then keep your liquid funds in the bank. Sometimes that is the better option.
100%. Let's talk about this too. There are a lot of investing opportunities that are out there that you could be using your money for differently. Yep. This is not our parents' economy.
Right.
You could be putting that money in crypto, in the stock market, on a side hustle, on a side business, invested in real estate. You could do a ton of things. So putting this down and losing and tying up that cash.
Dumping a bunch of money into a down payment on a house, it reduces your options if you don't have any more money left over.
Correct.
I hate to see people wipe out their bank account when they come to the closing table. When they call me and say, all right, I just got the cashier's check. There's pennies left in the account. I'm like, oh my God, don't do that.
Right.
Do it if you have to, but sometimes it's cool to see, hey, you don't have to put down all $60,000. You might be able to get in the house with 30 down. So.
Well, and I think too, that's a beautiful point, because my concern there is you're not actually prepared to be a homeowner. Mm-hmm. Yes, you got your down payment, but if you're going in not prepared for the AC going out, buying new furniture.
No emergency cash.
Correct. So when you're really trying to be best prepared as a homeowner, it's a beautiful blend of both.
Yeah.
Putting down what you can and being prepared with what you have left over, and not delaying it any further than you need to.
Yep. Okay, so let's talk about not having to sell your existing home in order to buy the next home.
Absolutely. And before you even do that, pause this button if you're listening to the podcast or watching us on YouTube. Pause. Go get your notebook. Go get your pen. Yep. We're going to map out how to pull this off beautifully with the least amount of stress. Mm-hmm. And Laura and I are going to literally walk you through step by step.
Yeah.
Did you get your pen? You guys got your paper?
Got my pen.
Let's do it. All right.
So one of the reasons this is so amazing for a home buyer to have access to is because there's so many nightmare stories. There's so many scary things that can happen when you're trying to orchestrate and have the stars align perfectly for you to sell your existing home and then move into the next one. You're
Absolutely.
Also dependent on so many different people, different parties involved in the transaction. I mean, if you're trying to purchase your next home, but you're dependent on the sale of your home, your current house, you're dependent on a buyer going through with everything flawlessly to close on that house. And that doesn't always happen.
No, you're right.
Sometimes, deals fall apart right before closing all the time. It could be due to the appraisal. It could be the buyer loses their job, whatever. It could be a number of things. And now they can't buy your house and you're under contract over here to purchase another one. You're on the hook for that one. And who knows how much money you've got invested in that so far.
I'm stressed out just even having you break this down. I go, here's another thing. We're talking about the tactical stuff. Mm-hmm. Let's talk about the personal stuff. Yeah. You're a mom, right? Imagine packing up the kids, the house, showings, staging, all this, then trying to find another house. Well, what happens if we sell and then we can't buy, and then I get a buyer for mine, but I haven't found a home I like? And you start to look at all the things that can go wrong and the stress, and it is it's terrifying if you don't have a plan.
With COVID going on, so many people are super cautious about showings, or they are scared to go in there. It's so nice if you can go ahead and move out and the house is vacant when you put it on the market. It's easier to stage or virtually stage, and you sanitize it. And now people that are going to view it, you don't have to worry about so many different people being in each other's path. That's a big deal.
Absolutely. I also like the idea that we're technically talking about two transactions. How much easier can life get if we can break this down into one transaction and then another transaction? Exactly.
Yeah. Also I have a lot of clients, especially that have kids and pets and everything else. Mm-hmm. And dealing with showings is so stressful. People don't think it's going to be that big of a deal. And it really is. Getting kicked out of the house every evening you're trying to do homework and dinner with the kids or on the weekends, and the house doesn't belong to you anymore. It's nice to be able to go shop for a house, close on it. Then you have the luxury of having both houses at the same time. So you can take your time moving out. You don't have to stress if the movers pack up the truck and then this other deal falls through and now you're left with a truck and you got to pay $500 a day for storage and go get temporary housing for your family. I mean, the list goes on. And I've seen it all. I'm not talking about things that might happen or that are a rarity. I have seen all of this and I see it constantly, especially in this market when people are overbidding on houses. How many times have I seen a house that went pending in one day and 20 days later back on the market?
Yep.
Because the appraisal and their financing didn't blend right.
Well, and let's talk about that. That's a wonderful example. At the time of this podcast that we're doing this, it's an absurd seller's market. So great, wonderful. You're going to sell the home within 30 minutes. Well, if your situation doesn't look the most attractive it can when you make that offer, you're going to lose out on other homes.
Right.
So one thing is if it's contingent on the sale of your home, so it's contingent that you can buy if you sell.
Yeah.
And
you're one of 10 offer. Your offer's going in the trash immediately. Your offer literally just went out of the running.
Correct.
Yeah.
So in this market right now, sadly as it sounds, you are not a legitimate buyer looking the most aggressive on paper.
No. So if you want to go shopping and you're in any price, I mean, where I'm seeing most multiple offers, I mean, it does happen in the $1 million range and over, but I'm seeing most of them, under $500,000 or $600,000. That's where all of these multiple offers are coming in. And it can be 5, 10, 15, 20 offers on these houses. And I'm like, I can construct a beautiful offer that's going to get somebody to win typically, but I can't do it if you are a contingent buyer.
Correct.
Do it. It's like there's nothing I can do for you, almost.
No, I mean you're right, and I think that's where let's lead into kind of what you and I talk about, which is our plan.
Well, and that's why we came up with this plan where I'm like, how do I take all these buyers? They're qualified to buy, and they are strong buyers, but we've got to figure out how to remove all of the risk.
Absolutely.
And so doing that, it lets them go shopping, buy a house, get done with that. Now we're going to deal with selling their existing home, their previous home.
Absolutely. And
so
I think,
tell us from a lender's perspective, like what does that look like? How do we do this?
Well, and I think going into this, you and I are going to go over some major bullet points that every buyer / seller in that situation is going to have. If there's any additional questions that you who are listening can think of that's different to your situation or additional, reach out to us, but we're going to hit all the major bullet points, right?
Yeah.
So number one going into it is don't assume that you're one or the other. Meaning, when you go to get pre-approved for your mortgage, don't say, I want to sell my home to buy the new home.
Right.
99% of lenders are going to do exactly what you tell them to do. They're not going to think outside the box like I do and what we're going to go over. So they're going to literally say, great, you're pre-approved. The big lenders, Quicken, is going to say, great, you're pre-approved, you have to sell your home. Mm-hmm. Well, that's fine, but that may not be what gets your offer accepted. So right away as a home buyer, you want to open up your mind to other options of buying a home before selling yours.
Right.
Okay. So number one that comes up is, well, can I even qualify? More people than not can qualify to buy another home without selling theirs. You can have 2 homes. So there isn't a rule where I can only have one. Sometimes I'll get that question like, could I even buy another house without selling?
Well, some people think that they have to make millions of dollars a year to qualify for 2 houses, and that's not the case.
Correct. So right away is going to the lender and knowing, can I buy without selling, financially speaking? At that point, either it's a yes or no, or like in my example, we're going to get creative on how to do that. So could we show that your current home is going to be leased out? Could we maybe pay off some debt so you do qualify without selling? So we're going to go into every scenario where a client has a home and wants to buy another one on mapping out every scenario where they could qualify without. Okay? So that's number one. Can I qualify? Yes or no? And if the answer is no, how? Or like, find me a way, right?
Right.
Because you don't want to be in a contingent situation.
No.
Second is...
Or temporary housing.
Right.
Yeah.
Or all the what ifs of that domino effect of what's going to happen. Even if you have a buyer, we didn't talk about this. Hey, you know what? I have a buyer in my home. I feel super safe going into a situation. Well, your offer is still contingent. What happens if that buyer gets denied before closing?
Yeah, I'll have somebody that their house is on the market. They've got a buyer. They're under contract. They're like, all right, now we're going to go shopping for our next house. And I'm like, you can't even go shopping because we can't rightfully put an offer on this next house knowing that your house is, you might have an offer and a contract, but it is not closed and funded. And until it's closed and funded, it's not a done deal. I mean, it could fall apart 2 days before. And now you're stuck. You've lost your earnest money over here, any other money you invested in getting into this contract. I mean, it's just a big web.
Well, and the clock starts, right?
Yeah.
So like in that example, all right, I have a buyer on my home who's closing in 30 days. Well, my clock is starting right now that I need to find a home. What happens if I don't find a home for 2 weeks? Mm-hmm. Now I'm not going to be able to close in time.
Yeah.
Right. So, and now I'm sort of forced into finding the home I can deal with in the next 2 weeks. Because let's be honest, if you don't see the one that you love tomorrow, you have to hope in the next week.
Absolutely.
It's going to come. Or you're now buying a home that you
don't really want.
That you're like, it's better than not having a home, I guess. I mean,
you're like, well, we've got to hurry up. We only have 21 days before we have to close. So we better let's just go with this one. And that's not what they really wanted.
Correct. So you're, in theory, if you don't structure this correctly, you're setting yourself up to fail. Mm-hmm. Like bottom line, like that's a truthful thing that as a buyer listening to this has to think is like, what puts me in the situation best to get my offer accepted on the home I want?
Right.
Not, I mean, in theory, you're going out of order. If you look at it correctly, you're structuring it where you're most concerned about selling a home you don't want, and you're not as concerned about buying a home that you do want. Right. So now you're going to buy something you don't maybe really love because you messed up the order on how best to put yourself in that position.
Right.
So, number one, figure out how to qualify, right? Okay, well, all my down payment is in my current home and I want to sell it to put that down. Okay. In a perfect world, that's the case. But in this situation, it's not. So let's think outside the box. Other ways to have the down payment to put down. You could borrow against a 401k. You could take from savings. You could sell stocks or borrow against stocks. You could borrow from family. Mm-hmm. Then when you sell your home, pay those back.
You can replenish that and pay that back.
Correct. So like one angle that I'll do a lot of times with successful individuals is they'll have money at, let's say, a Merrill Lynch and Edward Jones, something like that. A lot of those investment companies will let you borrow against your investments because they don't want you to withdraw it. Okay? So there's angles to open up your mind to borrowing it instead of coming out of the house. Then when you sell, pay it back. So like if you need to, let's say $50,000. Well, if you borrow against your 401k for $50,000, sell your home, and then 30 days later, 60 days later, you pay back that loan, it's the same end result. It's you thinking outside the box to put yourself in the best situation.
Right.
So you've got that. Also on top of that is going into it, well, let's say if you sold your home, you're going to put down 20%. Okay. Well, you're not in that situation. So what's the minimum? Let's say 5% down is the minimum. Okay. So one situation that I do with clients that's a home run in this scenario is what's called recasting. And this is one of those that you're definitely going to take notes on.
Right.
And you can reach out to Laura and I.
Or I'll just hire you and let you handle it.
Correct. Well, this is a topic that Laura and I will dig into more. I've done videos on it.
I'm like, the more you talk, the more I'm just like, I'll just have you be my lender.
Yes. If we just stop the podcast now and call me, I think I'll handle everything. Number one, just call me. We'll handle the other 10 steps.
Right.
But for those of you who want to be educated on it, let's talk about it. So the perfect situation is this. What's the minimum to get you into a new home? Let's say it's 5% on a conventional loan.
Right.
Borrow against your 401k. You put down the 5%. Sell your home, pay back the 401k. Problem solved. Would have been the same end result if you had sold your home and bought the new one.
Right.
But let's say you can only borrow 5%, but you have another $200,000 in your house that you want to put toward that mortgage. Okay. So the way the loan's going to be structured is you're going to buy the new home with 5% down.
Okay.
All right. After you close on your home, and usually if you got to make 6 mortgage payments on the mortgage the way it is,
okay,
you're going to take that extra money and you're going to put it toward the new mortgage.
The principal.
Toward the principal.
Okay.
Now, the normal way is you just send in a check and they lower the balance, but the payment doesn't change. So you owe less, but your mortgage payment still looks the same as if you had put down.
And the whole reason most people put that much down is because they want a low house payment.
Correct. Exactly. So recasting is where one time during a loan for a conventional loan, as long as you put down, let's say, the other 15%, so to get to 20%, they're not only going to lower the balance, the mortgage is going to re-amortize the mortgage.
Wow.
Lowering the payment to a 20% down mortgage payment, in theory.
Right.
So at the end, it is the exact same loan. Interest rate, payment is if you had sold your home, put down 20% on a new home, it's the exact same loan.
Right.
It's a matter of getting creative to think outside of the box.
Yeah, but you were able to buy your house without all of the risk involved of trying to coincide two different closings.
Absolutely. And the thing that I think really made you and I want to talk about our specific plan for this is all the problems we've seen clients run into who didn't have this plan. I think the other thing we've seen too is a lot of realtors and a lot of lenders will take what the client asks for or requests at face value.
Yeah.
So a buyer or seller or client will come to you and say, Laura, I want to sell my home and buy a new home, but I would need to sell my home to buy the new home. Most agents and most lenders go, oh, okay.
Yeah. And I'm like, okay, so, I mean, up until we knew that we had these options, I was like, all right, well, where are you going to be staying temporarily? Because we aren't going shopping and you aren't putting an offer on a house until the first one is closed. So you're going to sell it, move in with your parents or wherever you're going to go, and then we'll go shop for another house so that you can rightfully put an offer on a house. So, but a lot of people, they don't want to have to do that. Now they've incurred two different sets of moving expenses. You have no idea what they're dealing with their kids in school and commute to school, commute to work. You know, they're probably inconveniencing a family member or a friend somehow, having to live out of a bedroom with their kids and their pets. Like I've heard all of the nightmare stories, even staying in a hotel. It's not all it's cracked up to be long term. So if this is an option, it works out beautifully.
Well, and it also comes down to what's your other plan is to pray that all those dominoes fall into place at the right time every single time. And that's a bad position to put yourself into. I also think it's a bad position to put yourself into it is that if the lender, the mortgage lender and the realtor are not advising you on what puts you in the best position.
Yeah, and they're not working together. I'm always like, hey, when I got a buyer or when somebody's buying a house or selling whatever, I become best friends with that lender. I'm like, we're going to be talking every day. I've got to know everything that's going on, if the conditions of the loan are being met and everything. So this is just one where we stay in constant communication the whole time.
Oh, absolutely. Yeah. And I think that's where many times it's not just a rush to get a pre-approval letter. It's figuring out the exact plan like this one and saying, look, we're going to do these steps. It puts you in the best position possible. And I think that goes back to my earlier point, which is something that really needs to set in if you're listening to this podcast. If you're worried about selling your home and then figuring out the home you want to buy, you're setting yourself up to fail, period. Because that's the home you want. You're getting rid of the one you don't.
Right.
So stop that right away and be open-minded to all of your options. Have the lender work them up. See what the numbers look like. Talk to your realtor. Find out, hey, look, in this market, what puts me in the best position possible? Not having a contingency, if that's one of those things.
Absolutely. I mean, I feel like anybody, no matter what, if they need to sell their existing home to buy the next one, they need to see first and foremost if this is an option for them. And if it's an option, then yeah, hey, take it. If it's not, then we'll work it out through there. We'll do whatever we can to mitigate risk if you have to move forward in the traditional way. But if this is an option, it's worth taking a look at. Right,
exactly. And I'm going to leave with this one kind of semi-horror story to hit the point home. So a couple.
Thank you, Dave.
Yeah. Sorry, maybe I'm not ending it on a high note, maybe. But so I had a client where they were adamant they were going to sell to buy. Adamant. Hey man, I'm going to sell to buy. I'm going to sell to buy. I'm going to sell to buy. I said, okay. They got a buyer on their house. They're under contract on the new house. 2 weeks before closing, the buyer got denied for their mortgage. So 2 weeks before they're selling their home, 2 weeks before they close on their new home,
right?
They have
the
no
closings
buyer.
Were probably back to back. Yeah.
Same day, everybody was already thought they were at the finish line. Everything was mapped out, and then that happened.
Yep.
The seller on the purchase of their new home wasn't going to have an open-ended, like now you have no closing date.
No.
So you have no idea when this is going to happen.
Yeah, they're not going to play that. And they might have several backup offers waiting in the wings. And they're like, I'm sorry, like, no hard feelings. If you can't close, I've got a backup offer right here.
Especially in this market, right? They're not, you more times than not, you're most likely weren't the offer, right? So in that example, I had to tell the client, we have got to go back to our plan B, which is what we mapped out today. And he was like, all right, let's do it. And they got their home. They closed on the home that they wanted, that they loved. And then they end up selling, I think, 30 days later on the other home.
So at the time they close on the new house, they essentially own 2 homes. They got the new home that they want, and their previous home is still sitting there that they own, and now they have time. Now they can sell it. Got it.
Yeah. So I think now more than ever, as buyers become more educated and sellers become more educated, and they have all this information, is really lining themselves up to know what their options are, lining up with the right people, and don't go into it with a closed mind mentality. Be open-minded to, I just want to get the home I want.
Yeah.
Let's see what it looks like and get comfortable with those options.
Yeah.